So it's the end of the month. You got reports flying at you left and right, P&Ls, balance sheets, bank statements, and let's be honest, they feel like a bunch of noise. Sales might be up, but cash still feels tight. You're wondering, how can I be working this hard and still not feel ahead? The truth? Well, most of those reports don't actually help you run your business. So in this video, I'm going to break down the only 3 numbers that matter and how to use them to make smarter, more confident decisions. Plus, I'll share a few advanced metrics that can tell you even more about your business's financial health. Stick around and I'll show you how to pull these numbers, interpret them, and use them to drive profits and improve cash flow. Most HVAC, plumbing, and electrical business owners that I talk to are confused because their accounting software spits out a whole bunch of information and doesn't explain any of it. They end up ignoring their financial reports because of a variety of reasons. Whether that's because the accounting jargon is just confusing, it's almost like a different language, accrual basis, cash basis, retained earnings, depreciation, or because the reports have too much information. Too many line items with no clear takeaway, a lack of practical insights with no connection to their real-world business operations. It ultimately doesn't relate to the cash flow, pricing, or profit that they care about. And let's be real, you didn't start your business to become an accountant. You just need to know, am I making money? Do I have enough cash? Can I survive the slow season? So for now, let's ignore the complexity, let's ignore the jargon, let's focus on 3 key numbers. Once you understand them, you'll know exactly where your business stands. Let's walk through them. The number 1 key metric you should be looking at for your business is net profit, also called the bottom line. It just so happens to also be everyone's favorite number to look at because it's the amount of money you keep after all expenses are paid. And it's really easy to find. Just pop open your profit and loss. So if I have Craig's Design and Landscaping Services open here and scroll all the way to the very bottom line. So net income is the same as net profit. And here Craig is showing a net profit of $1,500. And so if this number wasn't meeting expectations, it would ultimately tell you whether or not you need to look at your pricing, you should look at your labor and material costs, or your overhead. For HVAC, electrical, and plumbing businesses, you should be targeting a net profit of 10 to 20%. So the second key metric that you should be looking at is your operating cash flow. So this one has a tendency to trip people up because it doesn't always align with your profit. We went over this in more detail in a separate video, but ultimately it might not be the same as profit because of a variety of factors, whether your customers are paying slow, you're paying for your material costs up front into your inventory, your loans, etc. And ultimately your cash flow can suffer because of that difference. So that's why it's worth keeping an eye on and monitoring. It's easy to do. So open your statement of cash flows or cash flow statement. And so I have Craig's open here. And you can see, again, we have $1,500 of income, but our net cash change for the period is negative $138. So you can see that we started with $5,100 and we're down $4,900 from the start to the end of the period. So despite business making $1,500 of profit, the other cash flow changes in the business means at the end, we didn't have as much cash on hand. So you need to monitor this. If it's a positive number, that's great. It means cash is coming into the business and staying in the business. If it's negative, you need to understand why and be careful that it's not a reoccurring expense that is decreasing your available cash. So the third key metric you should look at is your cash runway. So this will tell you how long you can survive without the business earning another dollar of revenue. And so let's look at this example. So Craig's Design and Landscaping, he has $2,900 in the bank. And if we pop back over to his profit and loss, if we look at his standard operating expenses, he's averaging about $2,600 per month. So with those two numbers, 2,900 divided by 2,600, he has just over 1 month of cash available if he never made another dollar. That's okay. I'd say it's in the yellow area of what we'd want. Ideally, you'd have 3 months of cash runway. That way you're absolutely safe. You've got breathing room, you can weather storms, you can invest into the business, You can sleep very comfortably at night. If you're under a month, you're just one slow season away from having to take on a bunch of debt. All right, so let's recap. First, we have net profit. So this tells you if your business is actually profitable and should be between 10 and 20% for HVAC, electrical, and plumbing businesses. Number 2, operating cash flow. This tells you whether or not your business is slowly burning through money or actually keeping the money that it's earning. So this is important to ensure that the money is staying in your bank account. You should be expecting this to be positive every month or quarter. And if it is negative, you need to understand why. Number 3 is the cash runway. This tells you how long you'd be able to survive if business were to slow down significantly. You're targeting 2 to 3 months of overhead to have in reserve. All right, you overachievers. Here are a few advanced metrics to help you troubleshoot the first 3 we just covered. First up, gross profit margin. So gross profit margin is the amount of money left after you've paid for labor and materials used to complete the job. For HVAC, plumbing, and electrical businesses, your gross profit margin should be between 45 and 60%. So let's dive into an example of how you'd calculate gross profit margin. So here I have Craig's Design and Landscaping Services and his P&L. So to calculate gross profit margin, we simply take gross profit divided by revenue income and multiply by 100. So Craig is running a 95% gross profit margin because his cost of goods are so low. Now, that's either A, because he's not doing very good bookkeeping and he doesn't fully understand how much labor and materials are going into his jobs, or B, he's running one heck of a business. I'll let you decide, but for HVAC, electrical, and plumbing businesses, again, we're shooting for about 45 to 60% gross profit margin. And if you're not hitting that, if you're falling below that, you probably need to understand whether or not you're pricing your jobs profitably, or are you inefficient in how you're purchasing or utilizing your labor or materials. Next, let's talk about overhead as a percentage of revenue. So overhead is everything like software, rent, fuel, marketing, utilities, the things to literally keep the lights on. A healthy range for a service business is 20 to 30% of revenue. So let's dive into this example with Craig's business. So Craig has almost a $4,900 overhead relative to his $9,800 income or revenue. So that puts him at almost a 50% overhead percentage of revenue. And that's way too high. Remember, we're looking for 20 to 30%. So now we would typically dive in and try to understand where we can lower his overhead. And like we talked earlier, we already kind of expected that his job expenses would be on the wrong side of the line. So here we know this should be above. And then everything else, we would have to understand him and his business more. So look at your business. If your overhead's eating 40, 50%, you need to understand why, tighten your belt, and get that number down so that way you can increase your net profit. So the final number you should look at is your accounts receivable aging report, specifically how much money is owed to you over 30 days. Now, this report might be in QuickBooks, it might be in ServiceTitan, House Call Pro, Jobber. It depends on how your accounting systems are set up. But ultimately, it's important to know how much money is owed to you. And so you'll see this number on the balance sheet as just kind of a line item. So here, accounts receivable, $5,281. But the aging summary report really breaks that down. And so again, we're specifically looking at those values above 30 days. And what you would want to do is sum up those values and divide it by the total to calculate a percentage. That percentage should be less than 10%. If it's not, you've given out free loans and that kills your cash flow. Stop getting overwhelmed by financial reports. When you focus on net profit, operating cash flow, and cash runaway, you'll have a clear picture of your business's financial health without needing an accounting degree. If you have any other questions about financial reports, drop a comment below. I'd love to help you out. Otherwise, subscribe for weekly financial tips and tricks and how to run a more profitable HVAC, electrical, or plumbing business. Talk to you later.